It's a core part of our strategy. Um, we are a cyclical business. The macroeconomic environment is uncertain, but we can run faster than our competitors. And we've been doing it for several years now. We saw share gains in 2023. We saw share gains in 2024. And the first quarter of 25, we've continued that. Our relative growth rate versus our competition on revenue is 130 basis points stronger. So that share gain continues. And it's all about being very disciplined about the countries and the sectors where we're placing our resources and making the most of the growth opportunities that we can find.
I would like to take a moment to just assess really what has happened in terms of your share price move. If I think about the performance over the last 12 months, your shares are down about 30%. And you have in the last quarter had to make the tough decision really to cut the dividends. So my question to you is, what sort of message are you getting from your shareholders at this stage? Do you get a sense that their patience is running thin at this stage?
So let me tackle the dividend and the share price, and then I'll tell you what our shareholders are saying. On the dividend, the macroeconomic environment has been tougher than we or anybody else expected for a longer period of time. We have prioritized deleveraging. We're making sure that our balance sheet is as strong as it can be. And therefore, we took the difficult decision to reduce the dividend and find a better balance between returns to shareholders and investment for growth. The share price ultimately is outside of our control. It's primarily affected by what's happening macroeconomically in the global economy. But what we are focused on is delivering on our strategy and executing strongly. And I think you can see from the results that we've delivered, particularly that market share gain, that in uncertain markets, we're continuing to execute better than our competitors, and our shareholders recognize that.
I would also like to ask you to give us a little bit of color, really, in terms of what you are seeing in some of the labor dynamics, really, across the European continent. Do you still see some sort of a difference in the labor markets of North versus South Europe? How is that going at this stage?
Yeah, I mean, if I look at the current environment, it is uncertain. We're not directly affected by shifting trade policy. And crucial point, we saw volumes improve modestly every month in Q1, and we've seen that continue into Q2. So we do have positive momentum in our business. If I step back and look at our markets, they're in very different places. So globally, there's growth in Latin America, there's growth in Asia Pacific. Our US business exited the first quarter in growth, which is a really important point for us because we've been working on the turnaround of that business for a little while. And then when we look at Europe, the Northern European economies are still quite slow. So Germany, France, UK, our markets continue to be under pressure, but we are seeing good growth in Southern Europe and in particular in Spain, where that business has been up for many quarters in a row. So it's a very mixed picture. And what we're focusing on is really making sure that we're making the most of the opportunities for growth and share gain. And you see it in that 130 basis points of relative revenue growth ahead of our competitors.